There comes a time in every trader's journey when things change. It is not a magical moment or a dramatic realization. Rather, it is a quiet shift in your thinking. You stop fighting the market, forcing trades, or expecting it to follow your wishes. Instead, you start to observe it calmly. This is the first real sign that you are becoming a profitable trader. In the early days, everything feels chaotic. You open your charts and see opportunities everywhere. Every candle looks like a signal, and every red bar feels dangerous. You swing between excitement and fear like a roller coaster. Your confidence rises with wins, crashes with losses, and you feel like you are chasing something out of your control. As you gain consistency, that chaos quiets down. You notice that you are not reacting emotionally to every price move. You stop staring at your screen with your heart racing. You stop refreshing your MT5 or trading view every few seconds to see if your trade is in the green. Instead, you breathe and trust your setup. You let the trade breathe too. You begin to see that the market is not against you, it is simply moving. Your job is to move with it, not fight it. This shift from chaos to clarity lays the groundwork for profitability. You might not notice it right away. It creeps up on you. One day, you realize you haven't revenge traded in a while. You notice that you didn't panic when a trade went slightly against you. You even chuckle when someone in your trading group boasts about turning $100 into $1,000 overnight, because deep down you know how that story usually ends. A profitable trader does not chase. They attract opportunities through patience and a consistent process. You start to think of trading like farming. Plant your setups, nourish them with discipline, and reap profits at the right time. You no longer feel the need to trade every candle because you understand that sometimes the best trade is no trade at all. As you progress towards profitability, your charts look cleaner too. You delete half of your indicators. You stop jumping between strategies. You concentrate on structure, price action, and psychology. Your setups become simple and effective because your mind is no longer cluttered. Realize that simplicity, not complexity, generates profits. Another big sign is that your trading journal transforms from a punishment into a helpful tool. You actually look forward to reviewing your trades because you want to understand yourself better. You analyze your mistakes without shame and start noticing patterns in your behavior, not just in price. You become able to predict when you will excel because you have learned what emotional state leads to success. You realize that being a profitable trader isn't about being perfect. It's about being consistent. You still take losses, but they do not define you. You no longer doubt your ability after a losing day. Instead, you review, adjust, and move forward. Losing becomes data, not a disaster. This new mindset seeps into your daily life as well. You become calmer outside of trading. You stop rushing your decisions and start managing money more wisely. You realize that trading is not just about making money. It's about mastering patience, focus, and emotional control. These skills transform you beyond the charts. One quiet yet significant sign of your growing profitability is how you handle boredom. Early traders chase excitement. They crave the thrill of entering trades, watching them move, and feeling alive with every tick. Professionals, on the other hand, embrace boredom because they know it signals discipline. They understand that when trading feels dull, it means their process is working. There is no drama, no emotional spikes, just smooth execution and steady results over time. You also stop seeking external validation. You no longer feel the urge to share profits on social media or impress others. You trade quietly, satisfied with your progress. You might even stop telling people you trade because it is no longer about your ego. It's about mastery. A profitable trader seeks peace, not attention. Another sign is that you stop fearing missed opportunities. The market will always move, and you know there will always be another trade. You no longer feel that sting when prices surge without you. Chasing only leads to exhaustion. You learn that patience is your greatest advantage, not prediction. Then there's how you talk to yourself. At first, your inner voice is harsh. You scold yourself for every mistake and call yourself foolish after losses. As you gain consistency, that voice begins to soften. You start treating yourself like a coach rather than a critic. You discuss trades with calm reasoning instead of emotional blame. You realize that how you speak to yourself influences your trading performance. This mental calm creates a beautiful state of flow. You begin trading with quiet confidence. You're not guessing, you're executing. No need to prove anything. You're simply following your edge day after day. Even when things don't go as planned, you trust that your system will deliver over time because you have seen it work enough times to believe it. The main difference between a losing trader and a profitable one is not the strategy, it's the mindset. Losing traders react, while winning traders respond. Losing traders act out of emotion, while winning traders stick to their process. Losing traders see each trade as a battle, while winning traders see the market as a marathon. When you start to find profitability, you shift from trying to predict to trying to sync with the market. You recognize the market's rhythm and respect it. You wait for the market to come to you, and when it does, you execute without hesitation because you have no fear left, just confidence built from experience. The truth is, mastering trading doesn't come from reading more books or buying more courses. It comes from failing enough times to realize that the only thing you can truly control is yourself. The market is a mirror that reflects your habits, fears, and beliefs. Once you have a handle on those, the profits will follow naturally. So, if you have begun to feel calmer when you trade, if your losses no longer crush you, if you are no longer fixated on being right, but focused on being consistent, congratulations. You are no longer gambling. You are no longer chasing. You are becoming something that most people do not achieve: a trader who understands that wealth is a reflection of mindset, not luck. The chaos has faded, and in its place you have found clarity. From that clarity, everything begins to grow: your confidence, discipline, and eventually your account balance. This marks the beginning of your transformation. It is the first chapter of your journey from an emotional trader to a consistent professional. In the end, profitability is not a destination. It is a state of mind. Once it sets in, you will never see the market the same way again. Every trader dreams of the day when trading is no longer an emotional roller coaster. They envision a time when they can look at a losing position and feel only calm acceptance. That change does not occur overnight. It is a process, often painful, but completely essential. As you grow, you start to notice a change within yourself. The emotional spikes that once controlled you begin to fade. You no longer feel adrenaline rushing every time a candle moves. You stop pursuing that rush from seeing quick profits. You begin to view each trade through a different lens: probability instead of emotion. You realize that one trade does not matter. What counts is the series, the process, the long-term consistency. This realization prompts you to think like a professional. You start treating the market like a business rather than a lottery. You stop asking how much you can make today and begin asking how well you can execute your plan today. This shift is powerful because it changes how you deal with everything on the charts. A losing trade no longer triggers panic. You don't question your identity as a trader. Instead, you take a step back, breathe, and analyze it logically. You understand that losses are tuition, the cost of learning the game. You no longer shy away from them. You study them. Another emotional transformation happens in how you view winning. Early traders treat every winning trade as a celebration. They delight in their success, increase their lot sizes, and break their own rules because they feel invincible. Consistent traders do not do this. They treat wins and losses equally, just outcomes of their system. A win does not make them arrogant, and a loss does not overwhelm them. This emotional neutrality is one of the biggest signs of maturity. It allows you to think clearly even in volatile markets. You start to grasp that your job is not to predict but to execute with discipline. You trust your edge because you have witnessed it work across hundreds of trades. You have seen enough data to replace emotion with belief. Reaching that level takes effort. It requires facing losses and enduring sleepless nights, moments of anger, and times when you feel like quitting. Every successful trader has gone through this challenging emotional phase. The difference is that they learned from it instead of avoiding it. They embraced discomfort, using it as motivation for growth. The emotional development of a trader is like the strengthening of steel. It must face fire before becoming strong. Every loss, every mistake, every emotional breakdown contributes to that process. Traders who quit during this phase never achieve profitability because they fail to let the fire strengthen them. Those who persist transform into disciplined, calm, and resilient individuals. You also begin to notice that you no longer need outside motivation. You wake up not hoping for good trades, but ready to act on your strategies. Trading shifts from being about excitement to being about performance. You are no longer hooked on the thrill of being in a trade. Instead, you focus on executing your plan correctly. Your relationship with risk also changes. You once feared losing money, but now you view risk as a partner in your business. You understand that risk isn't the enemy. It's part of the framework that enables growth. You no longer over-leverage just because someone advised against it. You do it because breaking your rules genuinely makes you uncomfortable. You manage your emotions just as you manage your capital, with patience and control. When you face losses, you resist the urge for revenge trades because you recognize the emotional harm they can cause. You don't double down to recover losses. Instead, you step back, reset, and wait for your next setup. This level of emotional control differentiates consistent traders from gamblers. Another significant change occurs in how you perceive time. When you start, you want instant results. You desire immediate growth in your account. As you progress, you shift to thinking in months instead of minutes. You begin to focus on compounding rather than quick profits. You realize that true growth takes time, and you stop comparing your journey to others. You also stop letting hope dictate your actions. Hope used to be your go-to emotion. You would cling to losing trades, praying for a turnaround, waiting for the market to bounce back. As a profitable trader, you move past hope and start taking decisive actions. You cut losses quickly without emotion because you understand that hope is the most costly emotion in trading. Your ability to accept loss without hesitation signifies your development into a professional. You no longer need to be right. You need to protect your capital. Success is no longer about how much you make, but about how well you preserve your account. This emotional transformation also changes how you handle drawdowns. In the past, a losing streak would shake your confidence. You would doubt yourself, your system, and even your purpose. Now, you approach it differently. You view drawdowns as feedback rather than failure. You realize that even the best traders experience losing periods. Rather than quitting, you double down on discipline. You reduce your position size, stick to your rules, and endure the storm. You stop letting emotions control your day. You leave trading stress behind when you close your laptop. Your mind is free from thoughts like, what if I had entered again? Or what if I had stayed longer? You learn to separate market activity from your mental space, which gives you a sense of peace, a rare gift for traders. This inner calm becomes your greatest asset. When you are composed, you spot opportunities more clearly. You don't rush or chase trades. You act at the right moment. The market rewards clear minds and punishes emotional ones, and you finally learn to maintain your composure even when others are losing their heads. You also become more honest with yourself. You stop blaming brokers, spreads, or news events. You stop making excuses. You take full responsibility for your trading outcomes. This accountability transforms you into a professional because you gain control. You can't fix what you don't own. You finally learn this lesson. Another emotional breakthrough occurs when you stop needing to be right. In the past, being wrong felt like failure. You wanted to prove yourself, to show that you could predict market movements. Profitable traders don't care about being right. They care about making money. They exit quickly when wrong and let profits run when right. Their ego stops influencing trading decisions. Over time, your emotional responses align with logic. You feel uneasy when you break your rules and satisfaction when you follow them, regardless of the outcome. That is when you realize you've reached emotional alignment, where discipline feels effortless. Even your physical reactions change. You once sweated when a trade went against you. Your heart raced as the price approached your stop loss. Now, your body remains relaxed. You've trained your nervous system through consistent practice. The market no longer dictates your physical state, your mind does. This transformation is remarkable. You evolve from being emotionally reactive to becoming a calm observer, analyzing data and executing with precision. You stop gambling and start functioning like a risk manager. You begin to think like a professional who controls their destiny. This marks the essence of emotional mastery: control. Not control over the market, but control over yourself. In trading, the one who controls their emotions manages their account. The one who controls their reactions shapes their results. The emotional journey of a profitable trader isn't about eliminating emotion. It's about managing it. You can't trade without feeling, but you can trade without letting those feelings dominate your decisions. You use emotions as data, feedback, and signals of your mental state. When you feel fear, you recognize you're overexposed. When you sense greed, you realize you're on the verge of breaking your rules. When you feel calm, you know you're in sync with your approach. That's what distinguishes consistent traders from the rest. They don't resist emotion. They understand it. They don't chase excitement. They pursue control. They don't react impulsively to the market. They respond with careful decisions. So, when you find yourself no longer panicking during drawdowns, no longer overly excited by wins, and no longer rushing to trade every market move, understand what's happening. You're changing. You're evolving. You're becoming emotionally resilient. This is one of the strongest indicators that you're crossing the line from being a dreamer to being a real trader. The chaos within you has transformed into calm. The fear has shifted to focus. The market hasn't changed. You have. This represents the emotional foundation of consistent profitability. At a certain point in your journey, something clicks within you. You stop viewing trading as a guessing game and start seeing it as a calculated endeavor. You no longer wake up chasing setups. You wake up preparing for opportunities. Your mindset shifts from emotional to strategic, from impulsive to intentional. This change, the emergence of the strategic mind, sets consistently profitable traders apart from everyone else. When you first begin trading, you depend on luck, intuition, and excitement. You enter trades based on feelings and exit due to panic or arbitrary targets. As you gain experience, this randomness diminishes. You realize that your task is not to predict market moves, but to respond systematically. When your edge appears, you begin to establish a system not only for entries and exits, but for your thought process. You start defining what type of trader you are. Do you trade momentum, reversals, breakouts, or ranges? You stop being a visitor in every market condition and specialize in those that suit your mentality. You cease attempting to trade everything and concentrate on mastering one area because you've finally grasped that mastery comes from practice, not variety. A strategic trader doesn't need rapid market movement. They need the market to act according to their plan. They know when to act and when to hold back. They recognize that doing nothing is a valid trading position. Patience becomes their tool. They don't feel compelled to be in a trade every hour because they understand that consistency comes from quality, not quantity. You also begin establishing parameters around risk. Instead of trading based on your confidence level, you trade based on set criteria. Your lot size, stop loss, and targets are all predetermined. You no longer adjust your stop loss because your ego doesn't control your system anymore. You know exactly how much you're willing to lose before entering a trade. This act of defining risk in advance separates professionals from gamblers. Then, you come to one of the most significant realizations. Trading isn't about predicting the future. It's about managing uncertainty. Every trade is uncertain. You can't foresee what will happen next, but you can control your response. Start viewing the market as a game of probabilities. You stop thinking, I believe it will rise, and start saying, if it rises, I'll execute this plan. If not, I'll exit. You abandon the need to be right and concentrate on maintaining consistency. The strategic mind flourishes on data. You begin collecting statistics about your trades, not for fun, but for clarity. You examine your win rate, average risk-reward ratio, maximum drawdown, and expectancy. You treat your trading like a scientific experiment. You rely on evidence rather than feelings. This is when your confidence becomes rational instead of emotional. You aren't confident because you feel good. You're confident because you have data to back it up. You've tested your system, recorded your trades, and built evidence. This kind of confidence is unshakable as it's based on facts, not hope. A strategic trader learns to adjust. The market isn't fixed. It changes. What worked last month might not work next quarter. Instead of panicking, you study the changes. You observe shifts in volatility, liquidity, and sentiment. You don't fight the market. You move with it. You stay humble enough to update your strategy, but disciplined enough not to reinvent it every week. This adaptability goes beyond strategy. It affects your mindset. You no longer resist uncertainty. You embrace it. You understand that the market owes you nothing. You stop expecting perfect conditions or setups. You align yourself with probability and accept the randomness as part of the process. Your focus shifts from how much can I make to how much can I keep. You realize that wealth in trading doesn't come from one big win. It comes from preserving your capital long enough to let compounding work. You begin to appreciate small, consistent profits because they represent control. They show that you're following your system without breaking discipline. You start to see the beauty of restraint. You stop trying to catch every move. You're fine letting trades go because you know that missing a trade won't hurt your account, but breaking your rules will. You understand that the goal isn't to trade more, it's to trade better. Strategic trader also stops comparing themselves to others. Don't care what other traders post on social media or how quickly someone else flipped an account. You recognize that every trader's system, mindset, and risk tolerance are different. You stay focused on your lane because you know consistency comes from internal discipline, not external approval. You also begin to think in terms of probabilities across many trades. You stop reacting emotionally to individual outcomes. A losing trade doesn't hurt because it's just one in a series. You trust that your edge will play out over time. That kind of thinking changes everything because you no longer see a loss as failure. You view it as data. The strategic mindset also changes how you view drawdowns. Instead of fear, you approach them with curiosity. You dig into your trade logs. You check whether market conditions changed or if you broke your rules. You use drawdowns as diagnostic tools, not emotional triggers. You become your own coach, constantly reviewing your actions and improving your process. Another major change is how you deal with boredom. Most traders lose money not because their system is faulty, but because they can't stay disciplined when nothing is happening. They get bored and force trades. As a strategic trader, boredom becomes a signal, a sign that you're doing things right. You learn to stay still, waiting for your edge to appear. You realize that real traders get paid to wait, not to click buttons. Then there's the change in how you view luck. You stop blaming luck for losses and stop praising it for wins. You realize that luck is always present, but consistency lessens its impact. The more structured your process, the less randomness affects your results. You stop focusing on luck and start prioritizing process execution. You also become highly self-aware. You start noticing patterns in your behavior, not only in the market, but in your mind. You learn what triggers impulsive decisions when you perform best, and when your emotions are most volatile. You design your trading routine around your mindset instead of fighting it. That self-awareness turns your weaknesses into strategies. At this stage, your trading journal becomes like a mirror. You no longer just write numbers. You also document your thoughts, feelings, and mindset. You track how you felt before and after trades. You identify recurring psychological traps and create rules to avoid them. This kind of journaling isn't just about performance. It's about mastering yourself. Here's something powerful. You begin to separate your identity from your results. You're not a loser when you have a bad day. You're just a trader executing a system. You stop judging yourself based on outcomes and start judging yourself based on discipline. You take pride not in winning, but in perfectly following your plan. Your mind becomes strategic not only in trading but in life. You start applying the same discipline to other areas, such as time management, focus, habits, and health. You realize that trading reflects how you handle pressure and emotions in general. The same patience and risk management that keep you profitable in the market also improve your life overall. You begin to think like a portfolio manager, not just a retail trader. You focus on preservation, allocation, and exposure. You consider opportunity cost, not just entry signals. You diversify your mindset. You know when to risk, when to hold, and when to stand aside. You stop being reactive and become deliberate. Perhaps the most defining trait of a strategic trader is this: they play the long game. They don't care about short-term fluctuations. Their goal isn't to win today, it's to remain in the game for decades. They understand that consistency compounds, the discipline builds wealth, and the patience is rewarding over time. They trade for freedom, not adrenaline. This mindset brings them calm even in chaos, because they know that every trade, every day, and every week is just one part of a much bigger picture. They're not here to prove anything to anyone. They're here to execute, learn, and grow. When you reach this stage, you notice how peaceful trading can become. The noise quiets down, the anxiety fades. The drama of constant wins and losses no longer affects you. You simply follow your process, trusting that in the long run, the math will work in your favor. That's when you realize you've become a strategist, not just a trader. You think in probabilities, act with discipline, manage risk effectively, and remain calm under pressure. That's not luck, it's growth. The growth from chaos to clarity, from reaction to control, from emotion to strategy. When you reach that level, the market no longer feels like an enemy. It becomes your partner, a mirror reflecting your discipline, patience, and self-mastery. That's when you know deep down, you're not just surviving in the market, you're thriving. There comes a moment in every trader's journey when you realize your biggest opponent isn't the market, it's yourself. It's not the volatility, the news, or liquidity. It's the part of you that panics when prices move against you. The part that doubts your plan after a loss, and the part that becomes greedy after a win. Emotional control is what turns skill into consistency. Without it, even the best strategy can fail under pressure. At first, you might believe that you can eliminate emotions. You try to suppress fear, bury frustration, and ignore greed. But as time passes, you discover that you can't remove emotions. You can only manage them. The key is not to trade free from emotion, but to trade without making emotional decisions. It's about feeling everything but acting impulsively. Consider how the average trader behaves. They win a few trades, feel invincible, increase their risk, and then lose it all. Or they lose a few trades, feel hopeless, start doubting their system, and make random entries to recover. This emotional cycle traps 90% of traders in inconsistency. It's not a lack of knowledge, it's a lack of control. Professional traders understand this well. Create rules not because they lack confidence, but because they know that confidence alone isn't reliable. They structure their process so that their emotions don't have the final say. They understand that discipline protects against emotional sabotage. The truth is, emotional mastery builds through practice and reflection. Every time you feel the impulse to act rashly but don't, your discipline strengthens. Each time you accept a loss calmly, your mind becomes more resilient. Over time, these moments of control accumulate like compound interest, slowly shifting your psychology from reactive to stable. You begin to see trading differently. A losing streak no longer feels like a personal attack. You stop interpreting losses as failure and start seeing them as part of statistical variation. You realize that consistency doesn't mean never losing. It means remaining emotionally stable during losses. That stability is essential for long-term survival. The best traders develop a strong sense of emotional neutrality. They don't get overly excited about a win or crushed by a loss. Their emotional responses flatten. They start viewing every trade as just another execution of a system, not as an event that defines them. This calm neutrality allows them to follow their edge through hundreds of trades without breaking discipline. But reaching that level requires awareness. You must understand how your emotions function. What triggers your frustration? What situations cause you to stray from your plan? What does greed feel like for you? Most traders don't think this deeply about themselves. They study the charts but ignore their own minds. That's why they keep making the same emotional mistakes. They're not undisciplined. They lack awareness. The emotionally mature trader maintains a psychological journal. They record their thoughts when they entered, what they felt during drawdowns, and what rationalizations they made. Over time, patterns can be identified. They see that their worst trades tend to happen after big wins or during moments of boredom. With that awareness, they create rules to protect themselves. For instance, a trader might realize that after 3 wins in a row, they tend to overtrade. So they add a rule to stop trading for the day after 3 wins. Another trader might notice they make impulsive trades late at night due to frustration, so they restrict their trading hours. These rules aren't about limitation, they're about liberation. Each rule frees you from a harmful emotional pattern. One of the biggest breakthroughs comes when you stop trying to control the market and shift your focus to managing yourself. You realize that the market doesn't owe you a perfect setup, doesn't care about your emotions, plans, or expectations. Once you grasp this, you stop fighting reality and begin going with the flow. Stop needing the market to behave a certain way and start getting ready for whatever it does. This shift from external control to internal control is the basis of emotional mastery. When your peace is no longer tied to price movement, you become unshakable. You could lose 3 trades in a row and still feel calm because you follow your rules. You understand that execution is more important than outcome. You also redefine what winning means. In the beginning, a winning trade meant profit. Now, a winning trade means discipline. Even if you lose money, if you execute it perfectly, that's a win. That mindset rewires your brain to prioritize process over results. Once you shift your focus from how much you made to how well you executed, your emotions start to lose their grip. Another key step in emotional control is learning to separate yourself from your trades. A trade is not you. A loss doesn't define you as a loser. A bad day doesn't mean you're bad at trading. But many traders unknowingly connect their self-worth to their results, which makes losses feel much worse. The emotionally stable trader views themselves as the operator of a system, not just the outcome of each trade. When you detach your identity from results, you create space for objectivity. You stop taking losses personally. You quit reacting to every market move as if it questions your skill. You can now assess your performance honestly because your ego isn't clouding your judgment. This detachment brings clarity, allowing you to correct mistakes instead of hiding from them. The next level of emotional control is patience. Patience isn't just about waiting, it's waiting without emotional frustration. It's being able to endure quiet markets, sideways movements, and lengthy setups without feeling pressured to act. Impatient traders deplete their accounts because they confuse movement with opportunity. However, patient traders accept that doing nothing is part of their advantage. Patience also means holding trades long enough to gain the full reward. Many traders cut profits early because of fear. They can't handle watching prices pull back, leading to small wins. But that habit undermines consistency. The emotionally trained trader stays calm during pullbacks. They trust their plan and let their trades unfold, knowing that control comes from trusting execution, not constant reactions. You'll notice that emotional maturity also changes your perspective on money. You stop fixating on dollar amounts and begin thinking in terms of percentages, probabilities, and risk units. You no longer evaluate a trade by how much it made, but by how well it fit your plan. This shift in perspective shields you from both greed and fear. When emotions run high, logic takes control. You start functioning like a machine, but a wise one. You execute based on rules, assess data, and adjust according to feedback. You'll still experience emotions, but they won't dictate your choices. They become background noise rather than a motivating force. The journey to emotional mastery is not flawless. You will still make mistakes. You might engage in revenge trading, feel impatient, or close trades too early. But each mistake becomes a lesson rather than a setback. You learn to forgive yourself quickly and move on, because consistency is about progress, not perfection. Eventually, you start to feel a sense of peace that many traders never find. Trading stops feeling chaotic. Your mind stays calm, even when the market is volatile. You know when to trade, when to pause, and when to take a break. You don't chase after moves, you don't panic, and you don't force trades. You've built a stability that the market can't disrupt. That emotional control begins to extend into your daily life. You become calmer outside of trading, more patient with others, and steadier in stressful situations, because trading has conditioned your mind to remain composed amid chaos. You learn to respond rather than react, and that skill transforms everything you do. In the end, emotional mastery is the bridge between knowledge and results. It explains why two traders can follow the same strategy but have entirely different outcomes. One trades impulsively and loses. The other trades calmly and thrives. Same charts, same setups, different mindset. That is the power of emotional control. The quiet strength behind every consistent trader. It's not about perfection. It's about remaining stable, rational, and grounded when the market challenges you. When you reach this point, you understand that trading isn't about controlling outcomes. It's about controlling yourself long enough for the probabilities to work in your favor. And that's when consistency becomes unavoidable.